It all started with a small SaaS company in Finland. Today, it's used in over 80 countries around the world. The journey, anything but easy. Lessons learned, key insights, hard-earned experiences. This is the founder's point of view.
Hi, welcome to the founder's point of view. And today we are going to talk about investments and how to raise money and what you need to take into account when you are having a discussion with VCs and investors.
Yeah, exactly. So we will go through our journey and focus on like when and for what to raise money, what kind of different options would you have when you are considering raising external money, and also few words about discussions with the investors.
Yeah.
I think that's today's agenda.
Yeah, first of all, when you are raising money, you need to know why you are raising money. Why do you need that kind of investment? And really, there are two kind of two reasons to raise money. And the first is that you are building something which needs investment and need time and more efforts and the resources what you have now. So that's one thing, that you are building something bigger, and typically it's a product, not service, but many times it's some kind of technical product or software or something that you are building. So you are guessing that maybe that product what you are building is solving the problem what your potential clients are having, and you raise money for building the product. And other situation where you should or you might want to raise money is that you have something which scales, and something scalable, and typically it's a go-to-market or sales or marketing. So you have a scaling customer acquisition model already, and you can tell the investors that you put one euro in, you will get 2 out.
Exactly. Our current investors contact person Jupe always says that money is fuel, which is like great way to like express the situation that if you can't hit the gas, don't raise any money. It doesn't solve you any problems. Like if you have a problem that your company is not growing, but you don't know the core problem behind that growing problem or growth problem.
Money is not helping you.
Exactly.
You need
Exactly.
Every time you are raising money, you should know that how to spend it and where to spend it.
Yeah.
And this is actually something that you will be asked from the investors, of course, because they want to know that how you are going to use the money they will invest.
If you look at our situation back then when we raised our first round, we were just starting the software business with the same founder team. So basically, when we founded the first company, the video company we have been talking about here as well, it was completely bootstrapped, so no external funding, just our own money and
yeah, we hit 3 million revenue as a service business, and we produce those videos in 14 countries without any external money.
Yeah, exactly. And it didn't feel back then that we would need money for that company because we didn't know basically how to scale it. And the market wasn't like good for us, I would say, because of the COVID and so on. But when we founded this video company, we basically had both of those you just mentioned. So basically, we had something, at least something to scale. We also had something to invest to build up the better product and so on.
Yeah, we have something to scale here in Finland, but the product we wanted to build is a totally new global self-service product for global market, and it was the main goal to build it, and that is why our investor invested on us, that they wanted to see together with us that are we able to build a global product, and is the problem actually global? Can we reach that self-service global segment, customer segment, through our marketing and through our product like growth approach? And that is something where they invested.
Yeah, exactly. So as a global SaaS company, we chose the traditional VC track. So basically, risk investment for the growing companies. We sold our shares and got some money for the company. That was our decision. Do you remember, did we consider any other options?
I think we don't, because we had that bootstrap history. We also knew and we had used the public grants and the loans from Business Finland, which is a Finnish public system to help and grant businesses. We knew that that's the one option, but it is not enough for us to build a global product, and we also, it is a pretty high risk to start to build a global product for the global markets. We also know that only venture capital, the VCs or the angels would be the good fit for us. I think we met a couple of angels, but we didn't think that we should raise from the angels. We wanted to raise from some VC, and we got 2 or 3 offers from the VCs before we decided to pick up the one with our current investor.
Yeah. What do you think? Because one like obvious difference between angels and traditional like bigger VC companies is that if you are aiming, at least here in Finland, if you are aiming to raise, let's say 1.5 million euros, if you are raising from angels, you have to get, I don't even know, 15 of them, maybe even more. And like if you're raising from traditional venture capital company or fund, you can just raise it from one of those funds, and that's it. So it's like
it's much easier. Yeah, it's much easier to get money from the angels, and that's why typical way is that you raise something from the angels first, and then you go to the VCs, or you raise from the VCs and the angels together to get enough money. But it's harder to get into the portfolio of some B2B SaaS VC, for example. But we were able to do that, and it was good for us that we found a VC company, because with the VC they have more resources, they have more connections typically than the VC. Of course, they can be big angels, but in Finland the angels are much. They are not as big as the global angels.
Exactly. So basically, it's like much harder to get the money from the traditional VC funds, but if you are ready for that, it's for you easier process. Just choose one instead of having like.
But the investment contract can be harder.
That's true.
With the VCs, because they want lower risk than the angels, and that's why the contract is different than with the angels. So it's maybe a little bit easier money with the angel, and because those angels, they have more time to help you personally and so on. So you are not just getting money, you will also get some help and the faces when you are doing business with the angels. But there are also the other options, the loans from the public loans, and also the loans from the bank, and then there's those risk investments from the VCs and the angels, and later when you have a more major business and you have a bigger role in the market and you know what you are doing, there is also the private equity, and typically they are not they are not buying the new shares of your company. They are buying your current shares and buying shares from the owners, those private equity companies.
Yeah.
Of course, they can also put in more money for to help the scaling and for the growth. But still, many times when private equity companies they come in, the maturity level of the company is higher, and the owners are doing at least some secondary exit, so they are selling their own shares.
Yeah. Yeah, that's actually a really good addition. So when we are talking about funding and raising some money, it means that we are getting money for the company, not for us.
Yeah.
So that's the traditional VC way when you are starting the company and raising the first rounds.
Yeah.
How about the discussions with the investors? How would you prepare for those?
I think that you should keep the barrier very low, and at least when you are starting your business, it's always good to have a conversation with someone who has more experience of the companies and the field and everything than you. And the VC investors and the angels who are putting money into the many companies, they are very valuable connections, and also their thoughts and the experience is very valuable for you. And that's why I really recommend to meet and have a discussion with many VCs, and it's not too much, but because you need to do your business and you need to focus on your clients, but still to get the understanding and the experience of those people, that's very valuable. And you can iterate the pitch deck based on the thoughts you will get there, and you can iterate even your own strategy based on the discussion you have had with those VCs and the investors.
Hey, one question which might be interesting for the audience. One really good way to meet lots of investors during the 1 week is to attend Slush here in Finland, in Helsinki.
That's true.
But what are the other tactics? Can you just call them?
Yeah, you can call them and you can send an email. It's pretty easy to get in touch with them, because for the investors it is not easy to find a good company to invest in. And we have always heard that during the hundreds meetings we have had during the years, that it is not easy to find a good company, and that's why they are also taking the calls pretty easily. And they want to have those video calls and the discussions. So you can send an email, you can send a LinkedIn message, you can call them, send a WhatsApp or whatever. It's totally up to you what kind of channels you can use, and it's pretty easy to get in touch with them.
So
much easier than with the clients.
Yeah, exactly. I was just saying that you can basically follow your multi-channel outbound sales process, and use that for the investors as well.
That's true.
Yeah. How about the pitch deck? I'm number guy, as you know, and for me it's
Commercial break. Trust Mary in 30 seconds.
Trust Mary helps companies to automate the review and feedback collection and utilizing in their marketing.
We are a Finnish company, but we are already operating in 80 different countries.
Our product is especially designed for the companies doing service-oriented business coming from traditional industries.
If you need any help related to these topics, just reach us out on LinkedIn. We are happy to help.
And now back to the story.
Yeah, sorry for that ad. So I was saying that I am the number guy. So when I prepared for those meetings, I've usually made sure that we have our numbers sorted, basically, so we can show them, for the investors, to the investors that here's our income, here's what the outcome looks like, our outgoing money, and this is the total outcome or total result. And now when we give some more money for this operation, this is what happens then, and so on. And this is like super important thing when you are meeting investors, that you can actually show them how your metrics are and what happens with the money you are raising now. What else?
Yeah. I think the pitch deck should include similar things that your strategy deck is including. So that's why there should be the vision, the mission, the steps towards the vision, what kind of steps you need to take, the market, the problem, the solution you have now, the vision of the solution for the future, and what kind of resources you have now, what kind of resources you should have in future, and what kind of steps you will take next, and what is the price of that. So what kind of what amount of money you are looking for now, and of course the competitors and the market analysis, and in the end that how you can get involved, what is the investment needed, what is the ticket size you are looking for from the one company, one person, one angel, or whatever. So it should include everything, because I think that it should include everything, because they are asking questions related to all of those things. And for example, us, we have got a great feedback from the investors, because we have always had pre-made answers and even the slides for almost any question they have in mind, because every time the investor has asked something from us what we don't know, or we don't have had a slide on the answer for that, we have created that after the meeting, because the next investor will ask similar questions, and then we have had the answer, and we have been able to solve even the metrics and the Excel of the things that they are looking for.
Yeah. Some of the audience may think that is it like wrong way be like super transparent and show all the numbers and everything during the first meetings, because you're obviously trying to attract those investors. So should you show them like something they would like to see and like adjust your numbers?
I think that if they are asking, you should be transparent and you should tell.
Yeah.
They are asking, but of course you have a limited time.
Yeah.
And you should spend that time well. And of course, it's a kind of sales situation.
Yeah.
So you need to show the best things first to get a feeling and get them to interest in you.
Yeah.
That is of course important, because it's a sales situation. But in the end, you need to be very transparent, because at least in the due diligence process,
Yeah.
that they will find out everything from you. And if you have told them a story which is not true, they are not going to invest on
Yeah.
you. And
Exactly.
they will cancel the investment during the due diligence process if they see that the numbers you have shown during the pitches you have given them are different than the reality.
Yeah. When you're deepening the discussions and actually like raising the investment, you should know all the basic terms or the terminology, I would say, like the words they are using when you go the discussions, such as liquidation preference, valuation, option pool, due diligence, obviously, and so on. During the first meetings, you are just discussing through your company, your pitch deck, your numbers, and so on. But when you are entering to the like serious discussions, you have to know basic terminology, because at the end of the day, it's negotiation, and you have to know what you are talking about if you want to negotiate.
And there will be lawyers, and the lawyers, they put always in something you don't want to see there, because they are trying. Their job is to present their client as well as possible, and they think that when they need to present their client well, they need to put in as much as possible the different kind of benefits for their own clients, and that's why you need to be very, very careful. And I really recommend to use the own lawyer and at least some legal advisor to help you to go through to the contracts and the papers.
Exactly. Other than ChatGPT.
Yeah, ChatGPT is not enough. Okay, it can help some, but still.
Definitely. All right. So first of all, if you are raising, be sure that you have something to scale or something built. Then compare different options, different funding options. We chose the traditional VC track, but it can also be something else. And last but not least, when you are entering discussions, prepare, be yourself, but prepare well.
Yeah.
Is that all for today?
And keep the barrier low to have those conversations with the VCs, because they will teach you a lot. They know many things better than you.
Exactly.
Okay, see you on next episode.
See you.